Let's get across the market open now. David Lane joining us from Audit. David, welcome to Wednesday. Good to have you back on the show. Let's start with what we saw on global markets overnight. Little mix there. The focus on Wall Street was the banks kicking off earnings season, but we also heard from Jerome Powell and more comments from Donald Trump in regards to China.
Yes, that's right, Andrew. It was most of the day it was actually pretty positive trading in the US. But those comments from Donald Trump towards the end of the trading day in relation to China not buying soybeans from the US and threatening to withhold cooking oil, etc., that tended to push the market down towards the close. So we saw slightly weaker close at the end. But as you said, during the day, the banks reported and some pretty positive reports that came through from the banks. We saw Wells Fargo up very strongly. They were up by about 7.1%. Citigroup was up by almost 4%. And the investment banks, as you would probably expect, have had a pretty good period. Goldman Sachs, which isn't listed, but they announced that their investment banking revenue was up by about 42% for the quarter. And JP Morgan, not as strong as Goldman Sachs. Their investment banking revenue was up 16%, but the market a little bit disappointed with that. So we saw JP Morgan off a little bit. But yeah, generally the banks doing quite well in the US, and I guess they're seeing the positivity that we've seen from Donald Trump coming in and reducing a lot of the regulation, as well as obviously markets have been in a very positive frame for a long period of time.
So, David, more broadly, of course, the market remaining at elevated levels, should that be of concern for investors? Because certainly we have heard from the IMF raising its concerns.
Absolutely, yes. Look, we've had concerns about the level of markets for quite some time. Both the US and the Australian market are very overvalued in terms of price earnings ratios and the levels that we're at. And yes, the IMF, as you said, raised concerns about the potential of a disorderly market correction. We started to see signs of that last Friday with the US market off and obviously our market weaker at the start of the week. But then, as we've seen over the last 12 months, the market seems to be very short-term in its thinking and forgets that and focuses more on the taco trade. But yeah, we are concerned about the elevated risks and the fact that we are at record levels. So yeah, certainly I think in portfolios we've seen profit taking. We've actually seen a fair bit of rotation out of large caps, which are overvalued, into some of the small caps, which are a better value. So I think, that will continue over the coming months.
Now, just taking a look at some updates we've got today, obviously the focus on Wall Street was the big banks. Well, locally, we have heard from Bank of Queensland. What have you made of its update?
Yes, Bank of Queensland obviously has had its troubles and struggles over the last couple of years. The result today actually looks reasonable. Their revenue was up 4% to 1.67 billion. Their annual cash earnings were up 12% to 383 million, so fairly positive there. Their net result was a reduction of 53% in their net profit, but that was due to a previously announced $170 million impairment. So Bank of Queensland actually increased their dividend to 20 cents a share. So I think, given the fact that BOQ are relatively attractive from a fundamental point of view when compared to the major banks, and the fact that it seems like this turnaround is taking some shape, I think we might start to see a bit of support for BOQ in the market today.
Now, elsewhere on the banking front, Westpac, it's that $500 million capital penalty that was imposed on it, back in 2019, has been removed by APRA.
Yes, that's right. Yeah, APRA have said that they no longer need to hold that additional capital aside. That was in relation to one of the muddy laundering scandals that they had back in 2019. I think that's a mild positive as far as Westpac is concerned. It means that they're able to use that capital elsewhere. But it is also a bit of a tick from APRA, because it said that they have actually gone through the process of doing a transformation and improving the culture at Westpac. So, we've obviously seen ANZ do well over the last couple of days with their strategic updates. So we might start to see a little bit more support for Westpac today.
David, elsewhere in the mining sector, we've got some reports from both Evolution Mining and 29 Metals. Now, of course, Evolution, the focus being in gold and copper, and we know where those underlying commodity prices have gone.
Yes, yeah, absolutely. They've benefited from that. Evolution's a very well managed business. They've got some great assets, and they've been able to generate very, very strong returns out of their mines. In their quarterly result, they had $676 million of cash flow, which is their second highest on record. So, yeah, benefiting from the fact that we've got those record gold prices, and we did actually see the gold price up again overnight. So, yeah, all that glitters is gold at the moment.
That's quite. It is amazing, isn't it? Just where that gold price is going. Are you searching for value in that sector at the moment?
We are. Yeah, we think that there are some stocks that are attractive. Evolution we like, although at current levels we've got a hold recommendation on it. Our target price is 10.20. They're trading above that at the moment. So we like Ramelius, we like Vault Minerals, Westgold, we think are probably better value in that sector. We still believe that there is potential in those stocks. We've also started to see a little bit of trading in the ETFs. A lot of our clients have had the gold ETF for quite some time as part of their overall portfolio strategy. And there's actually been a fair bit of interest in the silver ETF over the last couple of months, because silver tends to be a bit of a lagging commodity to gold and hasn't had as strong a run. It's still doing well, but not as strong as gold. So, yeah, a little bit of investor interest in the silver ETFs as well.
And also 29 Metals, have you managed to get across that?
Yeah, we have. It's looks like a reasonable result. They've got a little bit more of a diversified portfolio. They do have some exposure to copper and gold, but not as clean as some of the other companies. We've actually got a sell recommendation on 29 Metals. We think that current prices it's probably a little bit expensive. So as I said, on initial glance, the result today looks reasonable, so we could see a bit of support in the market for 29 Metals. So, it could be an opportunity to take some profits on it, which is done very, very well over recent months.